Banks know your credit score, your payment history, every late payment you've made since 2009, and yet they still don't know how much money you actually make. And that is driving them absolutely insane. If you've ever logged into your credit card app and been hit with one of those annoying pop-ups saying, "Hey, update your income for better offers," this video is going to explain exactly what's really going on behind that friendly little request. And I promise you, it's way more interesting and way more shady than you think. So here's the thing that blew my mind when I first learned this. Your credit report, you know, the thing that basically controls your entire financial life, contains zero income data. None. No salary, no savings, no investments, no net worth, nothing. Credit expert John Oldtimer, who literally used to work at Equifax and FICO, confirmed it. Income is not on your credit reports. It cannot be considered in credit scores. No wealth metrics are factored in at all. Think about that for a second. Banks can see that you paid your Visa bill 3 days late in March of 2021, but they have absolutely no idea if you make $40,000 a year or $400,000. They're basically lending you money while wearing a blindfold over one eye. They can see if you pay your bills, but they cannot see if you can actually afford them. And that gap, that blind spot, is why your Chase app won't stop bugging you. Now, this all goes back to the Credit Card Act of 2009. That law said banks have to check your ability to pay before giving you a credit card or raising your limit. Sounds reasonable, right? But here's where it gets funny. The rules that came after gave banks a massive loophole. They don't actually need proof. No pay stubs, no tax returns, no W-2s. They can just use, and I'm quoting here, statistically valid scoring models to estimate your income. So basically, they can guess. And your self-reported number when you applied for that card, for most people, that number is never formally verified. You could have written down $1 million and nobody's checking. Well, almost nobody. American Express is the exception. Amex runs what's called a financial review, and if your spending gets weird or your combined credit limits go above roughly $25,000 to $35,000, they will ask you to sign IRS Form 4506C. That gives them direct access to your actual federal tax returns for the past 2 years plus 3 months of bank statements. And if you don't cooperate within 14 days, account closed, spending frozen. Amex does not play. But most banks aren't doing that. Instead, they're running what I call the Great Income Shakedown of 2026. Every major issuer is now aggressively asking for income updates. Clark Howard called it out in late 2025, saying this went from being an infrequent practice to almost every large credit card issuer in the country asking repeatedly. Bankrate says you'll get asked at least once or twice a year. But let's be real. Citibank hits you with a full-screen pop-up practically every single time you log in. A former Citi employee even admitted on a consumer forum that they were literally paid to get clients to update their income. Like a sales product, your salary is their commission. So here's the obvious question. Why do they want it so badly? Well, the surface answer is risk assessment, especially for unsecured debt like credit cards and personal loans. And right now, banks are terrified. Total U.S. credit card debt hit $1.233 trillion in Q3 2025. That's the highest since tracking began in 1999. The average credit card balance per person is $6,523. Average APR, over 20%. Americans were charged $160 billion in credit card interest in 2024 alone. Delinquency rates have stabilized, but they're still elevated, with charge-off rates around 4%, which is a full percentage point above pre-pandemic averages. And here's the part they really don't want you thinking about. The pain is concentrated at the bottom. Federal Reserve data shows delinquency rates grew 63% in the lowest income zip codes versus 44% in the highest income areas. It's a textbook K-shaped economy. Fed Chair Powell literally called it a bifurcated economy. Rich folks are fine. Everyone else is drowning in interest payments. But here's the plot twist. A 2024 study from the Federal Reserve Bank of Boston looked at 5 major banks covering about half the U.S. credit card market, and they found something wild. The actual direction and size of your income update is, and I quote, largely unimportant for credit limit decisions. When income went up, 31% of people got a credit limit increase. But even when income went down, 19% still got an increase. The researchers concluded that updating your income works primarily as an engagement signal. Banks see it as proof that you're paying attention, that you're an active customer, that you're profitable. The number itself almost doesn't matter. It's the act of responding that they care about. So they're not just measuring whether you can pay. They're identifying who is engaged enough to be worth marketing to. Your salary becomes the key that unlocks their entire product recommendation engine. Higher deposits trigger personal loan offers. Income increases trigger premium card upgrades. You're not updating your income. You're opting into their sales funnel. Now, let's talk about why 2026 makes all of this even crazier. We've got 76 million Americans freelancing right now. That's 36% of the entire workforce. The gig economy hit $582 billion globally. Side hustles, crypto gains, stock dividends, content creation revenue, rental income, all flowing irregularly into people's bank accounts. Traditional credit applications were built for a world where you had one job, one paycheck, one employer. That world is gone. And then there's AI. Nearly 55,000 U.S. job cuts were directly attributed to AI in 2025. Microsoft laid off 15,000 people. Amazon cut 14,000 corporate roles. IBM eliminated 8,000 positions. The World Economic Forum projects 92 million jobs displaced globally by 2030. So your income in January might look completely different from your income in June, and banks have no way to track that in real time. Which is exactly why fintechs are building a parallel system. Plaid, valued at $6.1 billion, connects to over 12,000 financial institutions and has been used by more than half of all Americans. Companies like Nova Credit are doing what's called cash flow underwriting, where they use AI to analyze your actual bank transactions instead of asking you to self-report a number. Neobanks like Chime, with 8.6 million customers, use direct deposit data as their primary income proxy. They don't need to ask because they can already see. Meanwhile, Equifax's Work Number database holds 734 million employment and income records and charges $66 per verification, up from $17 in 2012. That's a 272% price increase. There's now a class action antitrust lawsuit over it. And the regulatory picture? Total chaos. The CFPB's open banking rule that was supposed to standardize all this data sharing got blocked by a federal court. 19 states have privacy laws now, but none of them really cover banking data. Consumer confidence collapsed to its lowest level since 2014 in January 2026. Tariffs are at their highest since 1932. The Fed is holding rates at 3.5 to 3.75%, and 28% of Americans now own cryptocurrency, with the government preparing to let people count crypto as an asset for mortgage qualification for the first time ever. So here's your playbook. These income requests are voluntary. You do not have to respond. There is no law requiring you to update your income with your credit card company. Period. However, if your income went up, absolutely update it. You might get a higher credit limit, better offers, upgraded cards. But if your income dropped, or you're the kind of person who might overspend with a higher limit, do not update. Just close the pop-up and move on with your life. One important caveat though, banks rarely verify, but intentionally lying about your income on a credit application can technically be considered fraud if things go sideways legally. So don't inflate the number. If you're going to report honestly. And if you're not comfortable sharing, just don't share. The worst that typically happens is your credit limit might get reduced during an economic downturn, and even that's not guaranteed. The bottom line is this: banks are not asking for your salary because they care about you. They're asking because $1.2 trillion in credit card debt is keeping their risk departments up at night. Because 76 million freelancers are making their models useless. Because AI is reshaping who has a job and who doesn't. And because every fintech startup in Silicon Valley is building tools that might make the question obsolete entirely. Your income is the last piece of the puzzle they can't get without your permission. And now you know exactly what they're doing with it. If this video helped you see the game a little more clearly, smash that subscribe button. We break down the financial systems that nobody else is talking about every single week. Subscribe, and I'll see you in the next one.